Good morning, everybody. It's 9:18 a.m. Pacific Standard Time. The date is 12/21/2013. 4 days to Christmas. And what we're taking a look at here is the Dow Jones Industrial Average and how we have closed at record highs. And what 2013 has so far been an extraordinary year for the bulls. And that over the multi-years in the Dow is we have finally gotten to a place going into 2014 is what is that year going to be like? And is that year going to be the same as the new year coming in 2014? We would say that right now we are in an extreme bull market. I have the weekly chart. This is the trend in the Dow 30 stocks now. And we've had some corrections throughout the year. Those are not a 10% correction, but rather mild pullbacks in the bull, and every time buyers had stepped in. This is the weekly bar that has a 10-week moving average, rising 10-week simple moving average with a big breakout going into the holiday. So when we take a look at where these highs are at 16,221, we can take a look that we're going to be starting a new year. 2009 lows were over here. So far, we've had 1, 2, 3, 4, and we've completed the 5th year of the 2009 lows. Now, having said that, it's easier for me to show over here where the lows started in the financial crisis is right over here. And then throughout the New Year's, you can see that this bull run has gone to highest levels than what we've ever seen before. And when we go back in other time periods, particularly over here, I'm just going to show a little bit of history back over here in the year 2000, is that the markets are acting like that. We've had, look at all the movements that the Dow had up to the 2000 tops. Then we have big corrections. So what we're saying is this. We're going to just simply say the following, and it's very simple. This is a monthly chart on the Dow Jones. We are going into calendar 2014 and what we call overbought, and it is. So it's going to be a challenging year because why do I say that? 2014 is going to bring a lot of volatility, a lot. We're going to go into the earnings season, and this is what the calendar year looks like. We have 1, 2, 3, 4, 5 up days, 5 months of nothing but up days day after day. We had a little pullback. Then we had another distribution. And then the last 4 months going into the end of this year, this is the December monthly chart, you can clearly see that we had some dips here. So the bull is back, and it's going to be a challenging period. And what do I mean by that? Challenge is the volatility is going to increase. This was the December low right here. I'm going to draw a trend line on this monthly wick. So when we started out the month of December, it did not start out well at all. Then we had the FOMC meeting, and they decided to start their tapering processes. So last week, we had a huge rally. We were up at one point 300 Dow points when that FOMC meeting came out. So they have started the tapering process going into 2014. 2013, they started it last week. This is another bull setup because the monthly bar is above and holding support on the body of the price here above the previous monthly bar. That's extremely bullish. So once again, January is going to be upon us, and I could just say from the history is that every expansion that we've ever had always ends up in a bad way. Stimuluses. So, the financial crisis, 1, 2, 3, 4, 5 years. History has proven itself clearly that this new year that's coming upon us is either the markets do one of three things. One, the bull run will continue. Two, that the earnings in the Dow starting to weaken and it would cause some selling. Now, we all know that expansions, multiple expansions, only last for so long. I will clearly tell everyone that as we start the new year, we will see clearly from a daily level or a weekly level where the buyer comes back in and buys the dip. We will say it's time to be very cautionary. When you're buying stocks that are overbought, you have to be careful. You want to buy the pullbacks. And then January earnings are going to be coming, MMTs. And this live analysis here is just a warning about going into the new year in a very overbought market. And once again, we can only say it as many times that we have said it in all of the years that we've been around is that we are not starting like we did last year, 2013. 2013, the market started with the gap up and never looked back. Okay? We're not on sale. We're starting the market at 16,221.14. Dow was up 14 points on the close. I just will tell you, it's been my experience going into January, if stocks are overbought, there's going to be a lot of volatility. And you have the calendar 2014, January earnings season is going to be upon us. I do not see the same year that we had over here, how 2013 started out. This was when you wanted to be a buyer. And now it's the opposite. We're going to start the new year at all-time highs. And we're saying right now, as we've always said, the market is not on sale. I don't care what you hear or where you get your information from. It's not on sale. We're at all-time record highs. Multiples are at record highs. And it's the perfect time for a good correction in 2014. It's been over 2 years since we've had a 10% correction. We're going to be on the lookout for that. And then once we get that correction, we will welcome it with buying opportunities. At that point, the market's on sale. Right now, it's a fully retail. Listen, the bull has been very, very strong. Volatility for 2014 is going to increase substantially. So you can see where the dip was in this wick. And it held half of the previous monthly bar right here. This is it, the trend line. So it's a bullish setup, but the volatility is going to increase. Stocks are not on sale. Once again, Merry Christmas and a Happy New Year. Just be aware. Have your shopping list ready so that when we do get pullbacks, there is a lot of money on the sideline and we can go much higher. However, you have to be the one who buys on that dip. You must be extremely careful up at record all-time highs when you're buying in the Dow Jones 30 index.